How are you all? My name is Mr. J.M. Kimani, a lecturer in Management Accounting. Welcome to Lesson 3 of Bookkeeping topic. Now, Lesson 3 is another question still to understand the interlocking costing system. Now, the question is May 2011, question 1. May 2011, question 1. The question reads that Takers Limited operates separate cost accounting and financial accounting systems. The following manufacturing and trading statements have been extracted from the company's financial accounts for the quarter ended 31st of March 2011. The amounts are given in shillings in thousands. Raw materials, opening stock 48,800, purchases 108,000, total 156,800, closing stock 52,000 deducted, raw material consumed 104,800, direct wages 40,200, production overheads we have 6,900, we have production cost incurred shillings 205,900. Work in progress, opening stock 64,000, closing stock 58,000. The difference is 6,000. Cost of goods produced 211,900. Sales 440,000. Finished goods opening stock 120,000. Cost of goods purchased or produced, cost of goods produced 211,900. Total 331,900. Closing stock deducted 121,900. Cost of goods sold 210,000 and gross profit 230,000. The following information has been extracted from the cost accounts of the company. Shillings in thousands, control account balances as at 1st of January 2011. Raw material stores 49,500. Work in progress 60,100. Finished goods 115,400. Additional information number 1. The cost accounts indicated that raw materials issued during the quarter ended that 1st of March 2011 amounted to shillings 104.8 million. Number 2, as per the cost accounts, cost of goods produced and cost of goods sold amounted to shillings 222.5 million and shillings 212.1 million respectively. Number 3, raw materials lost through floods amounted to shillings 2.4 million. Insurance claim for these raw materials is pending. This claim was reflected in the cost accounts. Number 4, a notional rent of shillings 4 million per month has been charged in the cost accounts. Number 5, production overheads were absorbed at the rate of 185% of direct wages. Then required, number A, prepare the following cost controls. Prepare the following control accounts in the cost ledger. 1, raw material stores. 2, work in progress. 3, finished goods. 4, production overheads. Part B, a statement reconciling the gross profit as per the cost accounts and the gross profit as per the financial accounts. End of question. Now, this question enables us to have the interlocking system in cost accounting, and then we do reconciliation because we have been given the information concerning financial accounting. Now, the first requirement, just like we have been doing, is to open the accounts like the general ledger. Even though it has not been asked, we are going to require it because of the balancing. So you can have here the general ledger, control account. We have the raw material stores ledger, control account. We have the direct wages We have direct wages control account, although this one we do not have a lot of it. Wages control accounts. We have others like the production overheads. Production overheads control accounts. We have the work in progress control account. So wages or WIP control account. Then you have the finished goods control account. We have costs of sales ledger control account. And we have the costing P&L and all that to get the profits. So with that, first of all, let's just record the opening balances. As per the general ledger, the opening balance, so which is a balance brought forward, this must be the addition of the opening balances of materials given there. We have 49,500 plus 60,100 plus 115,400. So the opening balance is 225,000. So that now the raw materials, we have the opening balance here. So balance brought forward, which is the 49,500. We have the work in progress, 6,100. This one, balance brought forward, 6,100. And the finished goods here, we have the balance brought forward, which is 115,400. So 115,400. So that is the beginning point. Then now we have been told in the information up there, there are some information which will not differ. Financial accounting and cost accounting. For example, like the purchases and all that. So looking at the purchases, which is 108, does not matter, does not differ, whether it's a financial or. So when we come here, we just record the purchases. Purchases, and this is 108,000, which should also be a double entry. So purchases here, 108,000. Double entry of the stores of the materials purchased is not through the bank or the accounts payable, is through the general ledger. Then another thing is wages. I can see wages of this is 4,200. So this, of course, is the general ledger. Of 4,200. So which you have here, this is direct wages. So 4,200. That will not differ. The overheads also, we have the general ledger. So this is 6,900. So this is production. Overheads, 6,900. So that is it. And the sales and all that will not differ. So that now we can look at the double entry. We don't have much problem. We have information number one, which is about the raw materials issued. So this one, we can have the WIP. What was issued to production was 104,800. Figures are in thousands. So we come to the production here. We have the raw material stores, 104,800. Then information number two is from the cost of goods. We transferred 222, cost of goods. So which is what we produce, that is. And you're transferring to This as per the cost accounts, cost of goods produced. So this is what we produced here. So this is to the cost of sales. Cost of sales 500. While again, the cost of sales, what we sold, let's see. And then this is cost of goods sold, exactly. So sorry for that. We need to make a correction here. That here, this figure, we have it up here. This is finished goods, 500, 500. While what you transfer to the cost of goods is now the 212, 100. So this is WIP 222 500 double entry, and then this one double entry here. We have finished goods of 212 100. That's what you have. Then you're told number 3, raw materials lost through floods amount to 2.4. So this one is a loss. And of course, double entry is from the raw materials. We have the cost P and L, which is 2.4 million, so 2,400. So we can record here the cost P and L. So control account. So we do have here that material loss. So raw material loss. This is 2.4 million or 2,400. That's double entry. Then we have the insurance claim for these raw materials is pending. The claim was reflected in the cost accounts. We have done that. A notion of rent of 4 million per month was being charged in the cost account. Notion, that's an expense. You don't have rent account, so we just need to have the ledger, general ledger, and the P&L as an expense. So you can have here notional rent. This rent we are doing quarterly, and it is 4 million per month.